Hello traders, welcome back to the Forex Geek where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the ultimate MACD indicator trading course, a comprehensive guide to mastering one of the most powerful and versatile indicators in the technical analysis world. Whether you're a beginner looking to understand the basics or an experienced trader aiming to refine your strategy, this video would help you with everything you need to know about the MACD. So stay tuned until the end of this video as I would walk you through a step-by-step trading strategy tailored to specially help you to identify unlocking to help you unlock the full potential of your trade. Now, what is the MACD? The MACD is basically the moving average convergence divergence, a technical indicator used to measure the strength, direction and the momentum of a trend in the market. It is widely regarded as one of the most effective tools for analyzing price action and identifying potential trading opportunities. At its core, the MACD consists of three key components. The first key component is the MACD line. This calculated by subtracting 26 period exponential moving average from the 12 period exponential moving average. It is reflected as a short-term momentum relative to the long-term trend. The signal line is also signified by the 9-period EMA of the MACD line, which acts as a trigger for both buys and sell signals when it crosses over the MACD line. While the histogram is basically, these are the two lines, this is the MACD line and this is the signal line. While the histogram is basically a visual representation between the MACD line and the signal line. This helps traders to identify period of increasing momentum and decreasing momentum. This is basically what it's about. Now, how does the MACD work? The MACD operates on two main principles of convergence and divergence. Convergence especially occurs when the MACD line and the signal line moves closer together. When they move closer together, this is called the convergence, indicating weaker momentum. When they are moving close to each other, they signal momentum. They signal weak momentum. Divergence happen when they move apart, signaling strengthening momentum. As you can see, they are apart in this area, signaling strengthening the momentum. Now, the MACD has a default setting. Now, let's look at the default setting of the MACD so that we can actually set our MACD as easy as possible. The default setting of the MACD is the fast length should be 12, the slow length should be 26, and the signal smoothness should be 9. This number represents the period used to calculate the moving average and the signal line. While this setting works best for most markets, they can be adjusted depending on your trading style or strategy. This is how you edit it. So let's see a step-by-step guide on how to use the MACD for our trading strategy. We first of all start by analyzing the overall trend, and we begin by analyzing the MACD line relative to the zero line. The zero line is this particular straight line between this upside histogram and the downside histogram. So when the MACD line is below or above the zero line, it signals an uptrend or downtrend. When it's above the zero line, it signals an uptrend. When it's below the signal line, it signifies a downtrend. To confirm further, you can use your higher time frame. You can use a moving average on your higher time frame. You can use a 200 EMA on your higher time frame just to better get a grasp of the direction of the market. This is to ensure that you are trading in alignment with the broader market direction. So if I'm to add my EMA of 200 just to make sure we are in the right side of the market, we set our EMA to 200 to make it easier for us to spot these levels. So EMA to 200. So we can basically see in this area when the MACD line was under, we are in a downtrend, while in this area when it's above, we are in an uptrend. Basically what it means. Then we spot our entry. Once you have established the trend, now looking at this area, we will trade from this area. Once we have established the trend that we're in a downtrend at this particular area, have established the trend, you look for the MACD line and the signal line to cross over, potentially an entry point. So when I'm in a downtrend, I look for a bearish crossover and I can see one. When I see this crossover at this particular area where it's crossover, this is a good sign to enter. The bearish crossover happens when the MACD line crosses below the signal line. So when this blue line crosses over the signal line, you can see it's a crossover in this area. This signals bearish momentum. While bullish momentum happens when this MACD line, this blue line, crosses above the signal line, signals buying opportunity. This is basically why I would want to enter this trade in this area. Remember, after the crossover, divergence between price action and the MACD histogram is another valuable signal. The divergence happens when we see the histogram moving over to the downside, signaling downside momentum. So this is when the divergence comes to play. The MACD histogram is another valuable signal. If price moves higher, it signals why the MACD makes a lower high. Now, when price moves higher and MACD is making a lower high, it indicates that we are seeing a divergence, and this could indicate a potential reversal in the market. So let's spot what we are talking about. If we can see at this point, market is going higher, but we can see, instead of seeing a at this point, we can, okay, let's look for a good example. Okay, this is a perfect example. First of all, we can see price is creating a higher high in this area, but the MACD line at this area is creating a lower high. This is a proper example, coupled with the fact that the histogram is creating bullish momentum in this area. This signals a bearish divergence. That means we should prepare ourselves for selling opportunities. So this is what it means. We refine our entry with support and resistance. We define our entries with support and resistance. We combine the MACD signal with key support and resistance areas in our chart to know where we are to enter from and exit the trade from. Now, drawing resistance area, remember swing highs and swing lows are examples of support and resistance area in the market. As you can see, this is a particular good area in the market. This area too is a good support area in the market. This is basically what we are looking for. Wait for price to bounce off the support or resistance level. In a downtrend, you wait for price to reject from the resistance level. As you can see, price broke up, broke back down, came to react from this resistance level. After we have seen our bearish confirmation, this further indicates that we are following price action and we are heading in a downtrend market. We look for price to reject from this resistance. As you can see, there are a lot of rejection. These are candlestick rejection from that area. This is a good signal for us to sell this particular trade. Remember, price action patterns, you can also make use of your bullish engulfing. When you see a bearish engulfing, rather a bearish engulfing or a bullish engulfing in terms of a bullish trade, when we see a bearish engulfing, can be a stronger pattern for you to take the trade at that area. Remember, stop loss are important. We always need to manage our risks efficiently, because it's essential to protect your capital. Always place your stop loss above the previous swing high. But in case of a bullish trade, if we are to buy from this area, we would set our stop loss just below the swing point of that area. This is how we set our stop loss. In a sell trade, just below. In a buy trade, just below. In a sell trade, just above. This is typically how we do it. And we look for, remember that we would also look for a shrink. Once we see a shrink in the histogram, it signals that price might equally wants to reverse. This is how we can take our profits. It's an early signal or early warning to exit your profitable trade. If I'm taking a trade from, let's say we took a trade from this area, our stop loss just here. Once we notice in this particular area our histogram is shrinking, becoming small, this is a signal for us to leave the trade, because potentially we might be experiencing a reversal very soon. We can also use divergence to exit our trade. We can use divergence when market made a series of lower low and the MACD makes a series of higher high. We can decide to leave the trade. This is, or we can incorporate a trailing stop in the sense of, once your position comes into profit, you take your stop loss and put it above your entry, and you keep on moving. As the trade moves in your position, you keep adjusting your stop loss to cover up the profit that you are making currently in the market. This is how we can exit our trading signal. We can also exit when we see a crossover between the MACD line and the signal line to the other direction. If we entered because of a bearish crossover, we can exit when we see a bullish crossover. We can further enhance our strategy with additional indicators. We can use additional indicators such as the MACD with our RSI basically to indicate overbought and oversold regions in the market. We can also combine this strategy with our Bollinger Band. If we combine this our strategy with our Bollinger Band, when price gets to the outer walls of your Bollinger Band, it further signals that you can leave your position. Basically adding our Bollinger Band, once we see price has gotten to the outer walls, it potentially signals that price is about to bounce off the outer walls. So by incorporating this with other indicators such as Bollinger Band or the RSI to indicate oversold and overbought condition, you can help make your signal concrete, and it further strengthens the momentum signal of your MACD indicator. By adding or following all these steps step by step, following this step in identifying potential areas through your MACD indicator, your crossovers, and where to exit with a good stop loss placement and entry criteria, you can be able to capitalize on this ultimate MACD indicator while combining it with other indicators like the RSI and Bollinger Band, which further strengthen your bias and your entry signal. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe, and turn on the notification bell so that you will never miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.